Crypto just had its worst day in weeks, and it burned almost $1 billion in leverage to get there. Bitcoin broke below $73,000 for the first time since mid-April, down about 3.4% on the day, and roughly 6.3% on the week. Ether took it harder, down about 4.2% and slipping under the $2,000 line. And nearly $1 billion in leveraged positions were wiped out in 24 hours, 93% of them longs. Traders betting up, caught leaning the wrong way. Two macro forces lit the fuse. The US and Iran are trading strikes again near the Strait of Hormuz, which torched the ceasefire optimism the market had been riding over the weekend. Polymarket's odds of a near-term deal collapsed from about 70% to single digits. And quieter, but maybe more important, a wave of US Treasury settlements is set to pull roughly $150 billion of liquidity out of the financial system over the next week. When cash gets drained, risk assets like crypto are usually first to feel it. But the macro only lit the fuse. The more telling story is in how crypto's own plumbing handled the stress. Start with Ether, because a real standoff is forming. Even as ETH bled under $2,000, Standard Chartered reiterated a $4,000 target, arguing on-chain activity will pull it back up. At the same time, futures traders just built one of the largest short positions on record, while retail has been aggressively buying the dip. That's a genuine tug of war, and it rarely resolves quietly. Down in DeFi, total value locked dropped about $20 billion. That sounds ugly, but it looks more like a stress test than a breakdown. The stablecoin layer held, still anchored by a deep reserve of US Treasuries backing coins like USDT and USDC. The leverage got flushed. The foundation didn't crack. Where something did crack was SUI. The network went down again, its second outage this year, with transactions grinding to a halt. On a day when the whole market is testing what's fragile, an L1 that can't stay online is exactly the kind of thing that gets remembered. One thing to watch past this week: the launch of round-the-clock Bitcoin futures is quietly erasing the famous CME weekend gap, those price jumps that used to open when traditional futures were closed, but crypto wasn't. 3 old gaps are still sitting unfilled. It's a small mechanical change, but it's one more sign crypto's market structure is getting stitched into the traditional one, for better and for worse. Because that's the real theme of a day like today. Crypto didn't break on its own news, it moved on the world's. The question for the back half of this week is whether that liquidity drain turns a flush into something deeper. We cover crypto on the days that actually matter, with explainers when it helps. Hit subscribe so you don't miss it. We'll see you next time.